The beginning of this week, in the markets overall and what is actually happening tomorrow, this is going to be a wild week because we're going to have lots of things, lots of events, lots of information flooding into the market and definitely having an impact on the market as a whole, but also how it's going to impact and move the price action within AMC. So you don't want to miss this definitely. All right. So let's just look at how the week currently started because it didn't look pretty good, and it's a very clear reason behind it. You can see Dow Jones from the S&P, from the Nasdaq, everything is down. Not that's quite big. This was a little bit expected given the great week markets had last week. But as we get into tomorrow, things are getting to be a little bit cracky here. Why? Because tomorrow we have the CPI data, Consumer Price Index. This is the indicator that the economy uses to measure inflation. And because we know that it was already high from the last month it get published, well, in between we had conflict with Russia and Ukraine. So commodities went to the roof. Copper, coal, oil, wheat, everything went up. All right. So it increased the price of oil and gas at the pump and also increased the price of food and pretty much everything across the board. Now, since then, things have cooled a little bit off. Since then, oil is no more trading at 120 or 130. As a matter of fact, today it dropped to 95, 94, 95 based on what, different countries around the world were doing to make sure, they flood the supply market with, inventories in order to keep price down. But it is still going to be an expected CPI data which is high. So what investors are actually looking into? Well, the market is looking into two things here. As always, there are two faces of every coin, right? So in the case we do have better than expected, right? Meaning if the real data comes in lower than what people are anticipating, based on what I just explained to you guys, well, it's going to be a good thing because it means inflation was not as, in reality, prices didn't grow as much as people were anticipating, all right? And that would be good. That would be good because markets will tend to recover a little bit, or people will have a lot more ease as to, well, first of all, we can, leave the money working into these markets. And we can expect the Federal Reserve to be not as aggressive as they are willing to be, because if inflation gets to be a lot more higher than expected, then it's going to give them everything they need, all the excuses, all the reasons they need to go full mode, And that's the second scenario. In the second scenario, well, markets are going to continue to drop. And in both cases, I guess things are going to be wild because it's going to bring a lot of volatility. But volatility is good because as an AMC investor, that is what you want to see. You want to have a volatile market because in a volatile market, you can have swings like this. You can have, a drop almost to 2.5% on the day and then manage to finish up to 2.6% on the day. So if you look at the lows and the highs of the day, we're talking about a 5% gain, a 5% swing today only. And that is good. The other thing is, by looking at the scenario where the market are going to continue to slow down, continue to pull back, well, it doesn't give confidence into some of the short sellers. Why? Because if it's bad, in one hand, it means that the Federal Reserve is going to come really, really hard, trying to crush as soon as possible inflation, increasing prices. And that means pretty much every single day we might have more than, every single month, we might have more than 0.5% of interest rate increase. And that is not good. We talked about this many times on the channel, how it would affect the short sellers into holding the short positions. But it also, in the other scenario, the first scenario, even though inflation comes in not as high as possible, the market is going to continue is going to recover. That's my expectation. And as the market recovers, well, some of the shorts here might be on a dangerous zone, because if the market is going this direction and you are going the opposite direction, well, it doesn't look good, especially if we have a swings like 400 points, 2%, swing on the major indexes. Literally, it means that things might not go well with you, especially for the little short sellers who came in since the price were dropping from the 30s, all right, since the latest run up. So that is why I told you guys at the beginning of this video that this is going to be a wild week. Not only we have those inflation numbers coming in, but we also have the first earnings that are coming from the banks and from their airlines company. So, I mean, if you mix all of that, poof, it doesn't look as we're going to have a calm week. But I may be wrong because nobody knows exactly what the future holds. But as always, I choose to hold on to AMC, and potentially if it drops back to less than going back to the 14s, I'm getting a little bit excited because it gave me an opportunity to add a little bit to my other position that I initiated a couple of weeks ago into the stock when it was dropping down. So yeah, hopefully you guys will not be phased, because something I learned with my experience in the markets, it's better be prepared than just be surprised, because when you are surprised, you tend to be emotional. And when you are emotional, that's when you get to do stupid decisions, especially when it comes to money. So I guess I will see you next video, folks.